All right, let's bring in our next guest analyst for Friday mornings. He's our only guest analyst because we like to do the call-in after he's done opining on what he thinks is important. It's Mr. Craig Bolanos. He's the co-founder and wealth advisor at VestGen Wealth Partners up in Chicago. Thanks for being on, Craig.
Scott, good morning. The call-in is the best part of the entire week for everybody out there. Dial those digits when we're done. But, boy, hot PPI, hot CPI, all sorts of changes this week. Got the big meeting happening in Alaska. Not yet, but later in the day. Lots to be revealed in the days to come, you know.
Are you changing your rate outlook on the back of the fact of that PPI number yesterday?
I'm not. We're still cutting in September. We're doing a follow-on act. I call it part deux, number 2 in December. I think the Fed's a little uptight. I think they're going to be uptight about something called jobs, Scott. And I think everybody knows that, my own opinion, the prices are going to get a bit more expensive for the general public. That's what I call the retail prices, the consumption prices, the everyday prices. But I think the CPI will remain okay because I think the biggest component is shelter, and I do believe the shelter costs are going to structurally keep coming down as those shelter costs tend to be a big laggard.
Well, hopefully that's the case, and we see at least it gives them some room. Stocks, we do have some, I think Buffett buying some United Health shares. I think that's got things going in the Dow. Are you still bullish stocks altogether?
Well, I had said earlier multiple times in the show, pull the tape, if we even use tape. I think it's all digital. I had said at one point in time that fair value for the S&P 500 would remain 6,350 to 6,500 for the year. Last time I checked on the print, we're right smack in the middle. So I think that means there's not a tremendous amount of upside in traditional-based equities that are market capped. Maybe that's the reason you've got the Oracle of Omaha dipping into shares that used to trade for 600 and change that went down to 300 and change, like United Healthcare, because you're going to have to look to uncover some value, not just lead into tech and communications. So my advice to everybody is, hey, use this as a chance to bring your asset allocation back together. Just as we had April showers, then we had May flowers. We're coming into that seasonality where September, October get a little dicey, might get an air pocket, and that'll be an opportunity for those who want to trade around positions, not just be a buy and hold investor.
No big, I don't know if you've got a machine in front of you, but no big shakes in retail sales. Nothing that's going to really, send the market into a tizzy. I mean, the control group was 0.5 expected, 0.4 is expected. We got a 0.5, but it's still less than the previous 0.8. And then retail sales month over month came in at a 0.5, which was a tick worse than the expectation of 0.6 and not as good as last month's 0.9. So that probably leans in favor of your rate cuts.
Yeah, I think it does. I think the Fed is very, very data dependent. I still defend the Fed not moving in July, but I really think there's enough momentum. It's not political pressure. That's what everyone wants to say it is. I think there's common sense pressure to get in front of this a bit. Now, this idea of a big, hairy, audacious 50-point cut, please don't give it to me. You're going to create mixed signals, tell everyone the economy's on shaky ground by doing that. I don't think we need that type of a dose of penicillin. We're only 30 days out from that September rate cut. Just give us a quarter. Let the wealth effect stay in play. Let's let everybody have a good holiday season, regroup for 2026, because we still got to see what the full weight of, I think we're landing on roughly an 18% effective rate for tariffs. We got to find out what that's going to be. And don't forget, we got the de minimis tax or the de minimis tariff rolling off at the end of August here. Everything coming into this country that's under $800 is going to have a price tag to it. I'm not judging it's good, bad, or indifferent. I'm just saying we got to wait to see what the net effect is before we end up making major policy.
Yeah, I agree. I mean, that's they got their guns pointed at Temu and Shine on that one, I think. But you're exactly right. So we've got a ways to go. I like your call about getting into the old holiday season. You're the first person on the show that's mentioned holiday season this year, so we'll take it. But I appreciate you coming on, Craig, getting us started here. Retail sales didn't really do anything for us, but you did. Thank you very much, Craig. Craig Bolanos, he's the co-founder and wealth partner at VestGen Wealth Partners up in Chicago. We're going to go away. We're going to pay some bills. We're going to come back for you to call us in. Remember, 855-776-6147. You can text if you're shy. Or if you call, you can call if you're not. That's the number, 855-776-6147. Give us a bell. We'll be right back.